as we're looking at 2021. What about risk management? The good news is it's still in place. How does the 117th Congress start talking about what the 2023 Farm Bill is? Let's let that go. Let's work with the programs that we've got to have right now for 2021. And with that, Jenny Scott and Darren Zerrusen are coming up to be able to work on that for us, okay? Here's your mic to measure that.
Thank you. All right, Darren, are you there?
Yes, I am. All right. Test 1, 2.
We can hear you, Darren.
All right.
Go
I
ahead.
can see my ugly mug. That's it.
All right. I thought it was operator, but all right. So, Darren, you're there?
Yep.
Okay.
All right.
Darren is on COVID quarantine right now, so he's unable to be with us, but he's on the phone. So he told me yesterday that he may go through a tunnel. Not really sure how many tunnels are in Effingham, Illinois, so I guess we're going to find out. But so Darren, would you like to start us off?
Yeah. So basically, like Jenny said, first I want to thank you guys for showing up and showing your support for us and our company. Yeah, it sucks. It wouldn't be 2020 without someone being on quarantine arrest and having to do this. So, but we want to talk about really 5 main things here. We want to kind of look back at 2019's ARC and PLC programs just a little bit, talk a little bit about going forward. We got some new endorsements through the federal side, some things that can help your APH. We got some double crop changes for 21, and then we'll talk about what we have to offer for you guys to your country.
All right, so basic information. Now you can annually elect ARC or PLC. So for 21, 22, and 23, you can elect ARC or PLC each year if you want to change your mind. Before, it was every time that a farm bill came out, so it was like every 4 years. So that's a big change. That's great. It still does go off of your base acres, 85% of your base acres.
Yeah, so, and big thing about this, the program must be elected before March 15th on that. Last year, we paid out 14 cents per bushel on our corn, PLC, and 92 cents per bushel on wheat. And as you can see up here, we actually, our base acres, 75% of the base acres were chosen for PLC, and 80% for our county. Now, most of the states or counties in the state of Illinois had a payment. There was a few that did not, but then 93% of the PLC for wheat, and that was a 92 cents per bushel. As of November 5th, our reference price for PLC was $3.70, which has been the same as the last 2 years. I don't know if there's an updated yet for that. Right now, we're not really giving any suggestions on which way to lean. We'll probably look a little harder on that more towards the middle end of January.
Okay, so summary of choices. Price loss coverage, it's a fixed reference target price program. The big thing with this is we'll talk about SCO a little bit more later, and this is the only one that SCO is eligible with. With ARC County and ARC IC, they don't work. Payments are 85% of crop-based acres, and with ARC County, the revenue program is 5-year Olympic average of county yields and ERP. Maximum payment is 10% of the benchmark revenue. Guarantee is 86% of the benchmark revenue. With ARC IC, it is also a 5-year Olympic average of farm revenues, and the max payments is 10% of benchmark revenue. Payments are 65% of total base acres. Okay, so quality loss option. This is a new option this year. It goes along with any policy. This is a federal thing, so anybody can offer it. It does not cost you anything if you don't use it. So what it's doing is if you had a quality loss at any point, then as long as you turned in a notice of loss, a timely notice of loss, and then a quality was adjusted by your adjuster, then you're getting to use those quality adjusted bushels instead of the post-quality adjusted bushels. So this has the potential to help your APH significantly. Like I said, you don't have to pay for it if you don't use it, so there's really no point in not using it. It works on the crops that we have around here, along with several others, but corn, soybean, and wheat it does apply to. And then if you look at the bottom, then it shows you everything that it's taking into account.
Yeah, and so my big thing for you guys that grow a lot of wheat, there's 2013 sticks in my head. We had a pretty bad summer that year as far as getting vomitoxin. The year before with corn, alpha toxin. Anything with low test weight. There was some late beans the last couple years. I probably got some dock. Really the biggest thing on this, it has to be put on our application before sales closing date, again, March 15th, and you'll hear that date throughout the rest of our presentation here. But then we have until April 15th to come up with that information. So, really what I challenge you right now is to start thinking about, those years that you had those bushels that were maybe you didn't get the full allotment because of whatever test weight, or sprout or whatever. So I challenge you to do that, and it's going to help your APH, like Jen said. So another thing that's new here is the enterprise units. We can actually now separate our double crop and our regular crop soybeans on different structures. So if we are planting wheat in multiple sections, like 20-20 rule, where you have 20 acres or 20% in two different sections, we can now choose our double crops as a separate enterprise unit. Now, if they don't qualify, obviously they'll go back to a basic unit. But I think this is big too, because now our double crops will not be held against our first crop. The biggest thing, I know some of you guys I've seen when I was watching the camera, there's a few people from Shelby County in there that grow wheat and double crops. So now we get to finally insure those double crop beans. So the big thing about this is you will have premium increase. I'll tell you that right now. But we also have to keep our yields separated. That's another thing, as if you're not doing it already. But, those are two big things. Now every bean planted will be insured.
Additional coverage options. The RMA, the new ones to RMA are the supplemental coverage option and the enhanced coverage option. They are both county-based. The supplemental is taking you up to 86%. So if you're at 75, this is taking you up to 86. The enhanced coverage option is taking you up even higher. That's taking you up to 90-95%. The new options for country specifically are Soil Type Plus. That's going off of your individual soil, and it's giving you the potential to move up to 90-95% coverage level. And AVE is Added Value Enhancement, and it is letting you protect your price and your bushels and letting you do it your way. Supplemental coverage option, SCO. So the big things to remember with this is you need to have it elected by March 15th, sales closing date. It does have to have a federal policy attached to it. And like I said earlier, the big thing with SCO is it's only available with the PLC. So if you are going to select ARC, then you don't want to do this. Enhanced coverage option?
Yeah, so this is another basically area-based county endorsement that will cover your federal policy as well. Kind of acts like supplemental coverage, except for we can get above that 86% with two other coverage levels. So now we can get up to 90% and 95%, but we are still going to trigger everything off of the county and revenue as well. But this also, you have to have it with the same agent. You can't have two, if you have a crop fail policy or anything, with two different people. This policy has to be purchased through the agent that you have with your federal. That's a big one. And the downside about this is, and along also with SEO, is we don't come out with county average numbers until June. So therefore, we really won't know if we have a claim on those until the June time. I mean, we'll know if our revenue side, because it uses the spring and fall price to set the claims on that. But as far as bushels go, you won't know until June.
ECO and high-risk land. If you insure your high-risk land, then you can use ECO. It does not attach to a CAT policy, and if you don't insure your high-risk land, then you can't use it. And if you have a high-risk alternative coverage, then you need to tell us that you want it on that also, because it's not just going to go from your federal policy to that. Soil type plus.
Yeah, so this is a new one the country offered last year, and it's only a country private product, so no other company offers this. But this is a new supplemental insurance policy designed to work with your federal crop insurance to get you another 5 to 10% of coverage, depending on what you want. The big thing about this is you can separate this out on the unit structures of a basic, optional, or enterprise, and it doesn't have to be the same with your federal. It allows farmers with lower risk soils to buy additional coverage, or even the ones that can't afford the rates because of the higher risk. It allows you to still justify getting a little more guarantee. But the biggest downfall about it is based off of your PI level, so your productivity index. As we know, the further south, most of the soils we go to, or the PI level gets a little less. We're learning more about this. So as far as the cost goes,